Corn prices went nowhere. Wheat prices were mixed, and the soy complex pushed to the upside with meal and bean oil joining soybeans for a short covering rally. Strength in boxed beef prices helped the cattle complex trade higher, while hogs finally stopped the bleeding with a round of solid price gains.
Live from the thrumming whir of agriculture via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with the Breinstein. Pro Farmer editor Brian Grete turns his keen eye toward the markets. Directly following the news, Matt Bennett from agmarket.net. I'm the handsome newsman Davis Michelson. Now, welcome the host of AgriTalk, Chip Flory.
You know, agriculture never stops, does it?
It never does. The thrumming whir is constant.
Yeah, it is. It is. It's absolutely 24 hours a day, 7 days a week, 365 a year. Something is going on that needs our attention. Yeah. Well, I guess that's kind of what makes it fun, isn't it?
Well, it really is. I'm not sure who's covering the other 22 hours of each day, but we got our 2 hours covered.
We got our 2 hours covered?
You best believe we got it covered. Yes, sir.
I love it. I love it. Welcome to AgriTalk. I'm Chip Flory. That is Davis Michelson.
Yeah.
And this is AgriTalk PM. We're talking markets today. Brian Grete, the editor at Pro Farmer, will be in, and I've got the list of items that Brian wants to talk about, and we're going to hit most of the markets. I don't know if he had anything in there on cotton or not, but I'll probably try to slide the cotton market in as well. And
attaboy.
Yeah, because we had like a 300,000 bale cut to the ending stocks projection last week. We'll find out what that means for the market as we make our way into spring, and what it means for acres. You know, it just the fundamentals of that cotton market has got to be moving some acres around down in the south. So we'll find out what Brian thinks about that here coming up in just a little bit. Everything good, bud? Here we are, 66 degrees.
I think everything's real good. I'm at 71.
Wow.
Slightly overcast, but are we calling today year 11, day 1? Or was that yesterday?
Oh.
Is this day 1 of the 11th year?
No, I think this would be day 2, wouldn't it? Isn't that how what?
Well, because 0 isn't a year.
Right.
Right. I don't know. I don't know what we're
doing. We're into year 11.
Yes,
Let's just put it that way.
Yes, we are.
Let's just put it that way. All right. Let's get to the news. What do you got?
Well, I've got some good news for wheat, and that is that USDA did not announce an export sales cancellation for the first time in 3 working days. The bad news for wheat is that didn't do anything to help the upside correction that started last week. May soft red winter wheat futures opened slightly lower, rallied through resistance at yesterday's high, and then fell back to close slightly above the opening range. Speculation of a smaller 2024 Ukrainian grain crop and tight supplies in India limited selling interest in wheat futures. July HRW wheat futures today a quarter of a penny lower, 587 1/2. July SRW wheat down 1/4 of 1 cent, 560 3/4. July spring wheat closed at 675 1/2. That's up 2 cents, Chip.
Yeah, watch these India headlines. When India starts making headlines in the wheat market, it typically turns into something that we need to track going forward.
Well, Chip, Brazil's CONAB, the source of official supply-side estimates for the country, this morning put the Brazilian corn crop at 112.8 million metric tons, down 943,000 metric tons from its previous estimate. And that put that cut to the crop included a 750,000 metric ton cut to the safrinha corn crop estimate. In the March supply and demand report released last week, USDA put the Brazilian corn crop at 124 million metric tons. May corn futures spent most of the day above the pivotal 440 level, but could not fully test resistance at the Feb 13 high of 446 1/4. March corn futures were steady today at 441 3/4. July corn unchanged, 453 3/4. December corn futures closed at 472 3/4. Unchanged on the day, Chip.
Yeah, that was a go nowhere market, no doubt about it. You know, USDA has a history of slow playing changes to the Brazilian crop, but this feels really slow. We're going to have to talk with Brian about that here in a bit.
Well, CONAB cut the Brazilian bean crop estimate, 2.5 million metric tons from last month, to 146.9 million metric tons. That compares to USDA's latest estimate of 155 million metric tons. ProFarmer crop consultant Dr. Michael Cordonier from Soybean and Corn Advisor puts the Brazilian bean crop at 145 million metric tons. Strengthened soybean meal and bean oil added to upside momentum in the bean market. May bean futures posted a low-range open and closed near session highs. May beans posted the highest close since February 12 and faced tough overhead resistance at 12.02. May beans were 16 and 3/4 cents higher, but 11.96. July beans up 16 and 3/4 cents to 12.08 and 1/2. Novi beans closed at 11.87 and 1/4, up 14 and 1/2 cents. Kind of a hump in the middle there in that July contract, Chip.
Yeah, absolutely. And kind of checking off some resistance levels above the market in soybeans. We'll find out from Matt Bennett here in just a little bit what that might mean for that market going forward.
Well, Chip, I've got July cotton up 25 points today to 94.59. On your livestocks, the sideways trading range in live cattle futures continues with April futures trading on both sides of 187.54, an eighth consecutive session. Heavyweight choice graded boxed beef shot $3.63 higher to $312.51 this morning, but movement was light, just 47 loads. April live cattle 65 cents higher, 188.25. April feeder futures $1.02 and 1/2 cents higher, 254.12 and 1/2. And April hogs were 207 and 1/2 higher to close at 85.35. Chip Lorry.
All right. Thank you very much, Davis. Matt Bennett, agmarket.net. How you doing, Matt?
I'm doing good, buddy. How are you?
I'm doing real good, especially looking at the soy complex. That's quite a move on a day when corn was steady and wheat was mixed.
Yeah, absolutely. I mean, bottom line is markets have actually been a pleasant surprise here this week. Once again, a couple weeks in a row of a little bit of an upward movement, well off the lows that we saw,
Yeah.
Right there, the week of commodity on Monday morning. We've really bounced.
Yeah. Yeah. The question is not so much have the markets bottom because it's at least a short-term low. I say that we'll probably be back at the lows tomorrow. But we've at least got the short-term low. What kind of upside can you expect from, say, July beans or July corn in here?
Well, Jeff, it's interesting. We had, as you know, we do webinars pretty often, and Brian's our technical analyst, and he was pointing towards the old gap in the chart, and I think where that's at for July. I mean, it's up closer to 13. I don't know that I'm that friendly. I get wrapped up in fundamentals a little too much sometimes, but for me, I do think that this market sure acts like it's got a heck of a lot more support than what we thought it was going to have. Any of these kind of little small pullbacks intraday, boy, it just seems like things continue to be supported. I point towards last Friday's reduction in old crop world supplies of 4.1 million tons.
Yeah,
you do that plus some Brazilian losses on their crop size, and I'll tell you, it started to actually tighten up a little bit again, which is, I mean, we're not tight by any means, but we're a heck of a lot tighter than what we were talking a month or two ago.
Right. Heavyweight choice box beef over 310. That's going to be a test, isn't it?
Oh, absolutely. It will be.
Yep.
But boy, this cattle market sure is acting still pretty good to me.
Yeah. Yep. No doubt. Matt, thanks, buddy. Talk to you later.
Yep. Absolutely.
All right. Matt Bennett, agmarket.net. We've got a lot of ground to cover, including those South American corn and soybean estimates from CONAB with Brian Grete from ProFarmer. He's next here on AgriTalk.
Chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad that you are with us on this Tuesday afternoon. Brian Grete is the editor at ProFarmer. He joins us right now. Beej, it's good to talk to you, buddy, for a little bit longer than our normal 2-minute hit in the morning. How you doing, man?
Excellent, Chip. Another beautiful day here in northeast Iowa in early March, and I'm showing 68 degrees at the moment, so almost unheard of.
Yeah, it's been an unbelievable winter. So I'm sure we're still going to get what's going to feel like some cold temperatures, but Just unbelievable. It's got everybody kind of chomping at the bit a little bit, ready to get out there and get things going. So it's been pretty crazy. What do you make of the spread between where USDA's at on the Brazilian bean crop estimate and where people like Dr. Cordonier are at? CONAB. I mean, you could throw CONAB into the group now, too. That is kind of down at the lower end of this range. CONAB's in the middle, aren't they?
Yeah, absolutely. Just about exactly in the middle. There's a huge range. USDA isn't the highest, believe it or not, at 155. There are some that are privates that are above that. And so just this massive over 20 million ton range from the low end to the top end, and very unusual for this late in the growing season. Back to your question, though, in terms of what I make of it. I don't think USDA, it really matters on what they peg the Brazilian soybean crop at, unless it influences U.S. exports.
Yep.
And so if they start to cut off more from the production side of things, and that increases U.S. exports, then it influences the balance sheet. And so from that regard, but just as a flat number, it doesn't really matter, to be honest with you. It's a lot to do about nothing in social media world. Honestly.
Yeah, but it gives us something to talk about.
Oh, absolutely. I mean, yeah, we can talk. I can talk forever on USDA's process and all that stuff, but we know they're slow with the foreign estimates and slow to react and slow to come down or to go up. If it's a big crop, and so the flip side could be happening. If we're talking about a record crop and the crop was getting bigger and those types of things. But I like I said, the influence on exports is market driven more so than the production side, especially this late in the growing season. Their harvest is into the final stages here, basically.
Yeah, they should be moving plenty of product into position too. There's no question about it. A year ago, 162 million metric ton out of Brazil. Right now, USDA's got them at 155. CONAB, I got to get the number in front of me. What was it? 140?
146.9.
146.9. It is the crop is getting smaller, but where is the difference? Is the difference on yield or is it on area planted?
I would have to go back and do a little bit more research on that, to be honest with you. I think I'm assuming it's area planted. I'm assuming USDA uses some satellite imagery that's showing a little bit better vegetation than what the reality is down there, and that's why they've been slow to cut their estimate. But I don't want to speak for USDA. I'd rather you get them on and talk about that, specifically than me speculating on it.
It sounds to me like you think USDA has to bring that its 155 number down.
I do. I don't know what the actual estimate is, but if I was just going to take a guess with such a wide range, I would probably take about the middle of the range, and that's about 147 million tons, and that's about where CONAB was, right at it this month. So I think that's probably a fairly realistic number. Let's be honest. I mean, the low end is way too low. The upper end is way too high, and you take the midpoint, and that's probably a legitimate landing spot.
Gotcha. Okay, so let's say that it does get down to 147, but it doesn't trigger any additional demand for U.S. soybeans. Doesn't matter, does it?
No, that from a price perspective, no, it wouldn't. Let's just be honest. The market reacts to exports, and so you have to have some sort of an export response there. Now, with that said, I think that we probably will pick up a little bit, but this time of year isn't the historically strong period. We've already posted our seasonal high in exports, and we decline from here on through the end of the marketing year.
Yeah. Okay. So everything that we're talking about is having an influence on the U.S. price, including the new crop price. which means that it's having an influence on acres that are going to be planted to soybeans here in the U.S. What does that number look? I know you guys are right in the middle of doing the survey of the Pro Farmer members, but what's your feel on bean acres?
Bean acres, that they were really low last year. It was a surprise. It came in much lower than anticipated. I think we'll be up, let's say 3 million acres or so on soybean acres. So, and down about that much on corn. I don't know. We'll see into the spring planting season here if there's any influence. I do know this. There's a record amount of anhydrous put down last fall, and so those acres are basically locked into corn.
Yeah.
We'll see. If it wasn't for that, I would say that soybeans are probably gaining a little bit more, and corn losing a little bit more than what I just said there. But I don't know. I really am curious to see what the data from the survey, our survey, comes back at.
When do you anticipate getting that done?
The end of or in next week from this week's newsletter. So the one dated the 23rd.
23rd, the newsletter, the 23rd. Okay. I got to remember that. I need to get you on the week after that. And well, that'd be a great time to get you on to preview the prospective plantings report then too.
Yeah, on the 28th,
Right.
because 29th is Good Friday. So markets are closed. So that report comes the 28th.
Yep. Okay. So a little bit of movement to the upside on corn acres, on soybean acres, downside on corn acres. Again, I'm kind of wondering if you add 3 million bean acres to a year ago, you take 3 million corn acres off. Does it have much impact on price?
Well, you would obviously increase your soybean carryover, which is already comfortable at the moment, and you wouldn't pull down enough on corn carryover to get it tight, and so from just a flat price perspective, probably not a whole lot of influence, to be honest with you. Somewhat of a wet blanket on soybeans, and not a whole lot of price support for corn.
Okay. Corn. Can we get any support from Brazil safrinha corn crop issues? I mean, CONAB took almost 1 million tons off, with 3/4 of that coming out of the safrinha corn crop. It needs to turn into demand, doesn't it?
Yeah, absolutely. Same type of story. Now, the difference here is that the soybean crop is into the final stages of harvest. Safrinha corn production in Brazil accounts for roughly about 3/4 of total production. And so it could still have a significant influence there. And so that's one to keep an eye on. Now, USDA has Brazilian corn production at 124 million tons. CONAB went down to 112.8 million tons. So that's a significant factor there. We've already seen U.S. corn exports start to pick up the pace here over the past 2 months. About 3/4 of the time, we've had over 1 million tons of sales and stuff like that. So still headwinds. No doubt that there's still headwinds, but I think that the South American influence or the Brazilian influence on the corn market is potentially greater than what it is for soybeans.
Okay. Yeah, that all makes sense to me. And as guys are trying to figure out exactly what that means for their risk management strategies, it kind of means if you get any kind of a bounce at all this spring in price like we're getting, you got to take advantage of it, right?
Well, and the key there is that there's still a lot of old crop corn and soybeans held on farm.
Yep.
And so you aren't the only one individually looking to sell a rally. There are a lot of you out there that are looking to sell price rallies. And so that's probably going to restrict the upside to some degree. Now, the funds are heavily short, especially in the corn market. And so, just a normal short covering rally, you're going to get a price response. The worst case scenario would be if the funds systematically get out a big number of shorts, and we don't see a big price response.
Right.
Yeah.
don't see much price movement. Okay, there's a big variable in this, and that is weather. I want to talk about that next with Brian Grete.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 1/4 of a penny lower at 587.5. July SRW wheat also down 1/4 of a cent, 560 3/4 of the close. May corn futures were steady at 441 3/4. December corn futures closed at 472 3/4, also unchanged on the day. May soybean futures were 16 3/4 cents higher today at 11.96. July beans up 16 3/4 to 12.08 1/2. July cotton futures up 25 points to 94.59. On your livestocks, April fat cattle were 65 cents higher at 188.25. April feeder futures $1 2 1/2 cents higher at 254.12 1/2. April lean hog futures $2 7 1/2 cents higher at 85.35. Get more market news every market day. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
Welcome back to AgriTalk. I'm Chip. Yeah, Davis, that doesn't sound like Big Apple Joe at all, does it?
No, it doesn't. No.
Giving up on supper just because you had a big lunch?
It's too soon, Joe. It's
Yeah.
too soon in the day.
I'm out.
Don't rule it out.
Calling it.
You calling it?
I don't know.
Doesn't hardly seem to make sense. I mean, Brian Davis there during the break was talking about the big old bone-in pork chops that he's having for supper tonight. My wife is not around for supper tonight, so I'm having skirt steak. I'm looking forward to that big time. So, and then Joe comes in with, big lunch. I don't get it.
Yeah, not right. Not something systematically wrong there.
I stand by you, Joe Stackler. I stand by you.
I did until this moment. I thought everything was fine. All right, welcome back to AgriTalk. I'm Chip. That is Davis Big Apple Joe and our guest analyst today, Brian Grete, editor at Pro Farmer. We spent a lot of time in the last segment talking about Brazil because I'm trying to wrap my head around that big, wide range, especially at this time of the year, on the corn crop estimates and the bean crop estimates from private sources and from USDA and from CONAB. We didn't even talk about Argentina. What's the situation there?
Pretty solid, to be honest with you. They went through a stretch a little bit ago where crops were stressed, but the bulk of the growing season has been pretty favorable, and it looks like it's finishing up in a favorable manner. So, if you compare year over year, last year, obviously, they had the historic drought that just absolutely slashed production. So major year over year increases this year and getting back, and there'll be a force on the export market, especially for soy products, but also for corn and soybeans. And so, that is probably the biggest change, is that the big year over year increase in production and the fact that they'll be a major exporter again.
Yeah. A year ago, we had to trade the Argentine drought twice. Once during the growing season when they were losing a bean crop, and then again later when the market realized they didn't have any beans to crush for meal, we traded it a second time. I hope we don't have to trade it twice on the way down, dude.
Yeah, no, I think that as it's setting up, we had a resurgence in El Nino here just recently, but boy, world weather came out late last week and said that it looks like a quick transition to La Nina, and so we'll see how that influences. Probably not going to come in time to influence the Argentine crop, but could definitely influence the summer weather as we move forward here in the United States.
What about for the safrinha corn crop?
Definitely would have an impact there.
Okay.
That could come into play, but Yeah, we'll see. Actually, the El Nino, the longer it lasts, is probably more damaging to safrinha corn, just in how their
Okay.
production cycles are down there. So
Okay.
we'll have to see. I think it's the quickness of the transition, and that's
Yeah.
pretty much what World Weather was talking about. If there is a quick transition, then it tends to be warmer and drier in the United States during the summer growing season.
Is it a second half of the season issue, or does it get here even before that?
No, it would come probably at the end of the spring time frame and then forward. So that would be your influential time frame, which happens to be the critical time frame for U.S. production. So that is something to watch as we move forward, and potentially market moving. In all likelihood, would be market moving if we do trend warmer and drier. If you look at the U.S. drought monitor. Key areas, obviously, northeast Iowa, where we're at. You see a red blob there. So that D3 drought, that's your driest area within the Corn Belt right now. But there's plenty of D2 and D1 drought all the way from, let's say, the eastern half of Nebraska down through Kansas and then eastward, and including the northern Corn Belt, the Dakotas, Minnesota, Wisconsin. And so those are your primary areas. As you get out into the eastern Corn Belt, there is a little bit of just abnormal dryness, Ohio, Indiana, and that type. But I would say the central Corn Belt is your key area if we do trend warmer and drier through the summer.
It just seems like the corn market in particular is going to be very, very much going to have a prove it attitude that there's yield risk out there.
Well, keep in mind, we didn't get to trend line last year, but we produced a record yield. And so trend line is going to be about 181 bushels per acre this year for corn. And will we get to trend line? Maybe not, but we potentially could be a record or near a record. And so I think the trend line numbers are off from USDA. We've talked about that plenty of times over the past year or so, but USDA's trend line numbers are too high. But the ultimate result is what you do in comparison to the year prior and what it ends up doing to production, which influences total supply, which influences your ending stocks.
Right. Okay. Let's see, the last thing that I wanted to talk about on grains, and you did mention it, but the funds are just they are still loaded up on the short side. They've gotten out of some. We've seen some upside price reaction. How much more can we expect out of that play in the grains?
Well, so from a technical perspective, the May corn closed right at the 40-day moving average, and the last close that we had above that was late October. So we have to go back quite a ways. May soybean futures closed above the 40-day moving average today for the first time since December. And so from a technical perspective, we are forging lows in both the corn and soybean markets. Still have a lot of heavy lifting to do, and we're probably going to need some sort of a bullish catalyst, whether it's that safrinha corn crop being stressed in Brazil, whether it's concerns here in the United States during the growing season, whatever, some kind of bullish catalyst for the funds to aggressively get out of those short positions. And so, if they just cover some and it turns into a little bit of a rally and then the farmer selling kind of chokes it off, then you got to restart it again and those types of things. If we're going to see a long, sustained and really bullish move higher, it's probably going to take some kind of catalyst.
Yep. Okay. All right. Heavyweight choice graded boxed beef prices this morning, up $3.63 a hundred, $312.51 on light movement, 47 loads. But here we are above $310 a hundred. Beej, I mean, that's reason to support the live cattle market, even when we're talking April at 188. I think that's reason to support the futures, but boy, it's going to be a test for the demand side, isn't it?
Yes, yeah, absolutely. And Select is almost up to 300. So
Right,
just
$299.78.
yeah. We are going to have some sticker shock, I think, at the grocery store level
Yeah.
for consumers as we move forward. And there's probably no way of avoiding that. Short term, this rise in wholesale prices has done packers a favor because it's allowing them, they're able to raise the wholesale price, which has allowed them to get their margins from deep in the red to just moderately in the red. And so they've been able to somewhat control the supply side. They've cut back on their kill hours and those types of things to control the tight supply. Now, the tight supply isn't going away. So if they could somehow get their margins back in the black, and then they're going to be a little bit more free with their cash cattle bids. And we've already seen cash cattle rise to the highest level since late October last week. And just because of the tight supply, it's going to continue higher. But you mentioned the demand side, and I think that's going to be critical in determining how high these markets can go, whether it's the wholesale beef price, the cash cattle price, the cattle futures. Demand is probably the key in determining exactly how high we go.
Yep. That's where we need to keep watch most closely. Dang it, Tyson's closing that pork processing plant down at Perry. It's 9,000 head a day, about 2%. It doesn't sound like a huge number, but that'll have a difference on that Central Iowa market, man.
Absolutely. It just means more hogs that have to move to other plants, and we've already got a plentiful supply of hogs, and so we've seen these types of things happen before, and it isn't bullish for cash prices. That's for certain. But it'll take a little bit of time to work those extra hogs through to other plants and those types. But I would assume that over the course of time, it'll kind of just dissipate as a market factor, and it'll become the new norm with that plant closed.
Okay. Real quick, do you like the structure of the lean hog market with the July contract at almost a $20 premium to the April?
Well, I don't really have a problem with it, so to speak.
Okay.
Seasonally, we're probably going to top out in the cash market, short-term top, and pull back a little bit sometime in spring, and then go again to our midsummer peak there.
Gotcha. Good stuff, Beach. Thank you so much. We'll talk to you again tomorrow morning on Markets Now.
Absolutely. Thanks, Chip.
You bet. Brian Grete, the editor at Pro Farmer. Okay, we've got a little bit of ground to go back over from those conversations with Matt and with Brian Davis Michelson, and I will do just that when AgriTalk returns in a moment.
In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
And welcome back to AgriTalk. Your pal Davis Michelson here with Chip Flory. You know what I'm thinking about at this time of the day? I actually did pour a cup of coffee. I got the last cup of the day going right now.
Okay, all right.
I'm thinking about how hard would it be to hook up a subwoofer to a CB? Huh? To a CB radio?
To a CB radio?
Mm-hmm.
You're feeling the need to do that?
Well, in case you get Barry White on the line, you're going to need those extra bass frequencies. You're going to want to highlight that.
That's right.
I don't know if that's a thing or not, but it seems like it probably exists,
dude,
somewhere.
It's got to be a thing. You can make it happen.
I could make it happen. Yeah.
A subwoofer on a CB. Nice.
I bet it could be done. Hey, Matt Bennett thinks it's been sort of a pleasant surprise in the markets this week. Off to a decent start, and I don't know. I'd have a hard time arguing with him.
Oh no, I'm not going to argue with that at all. It has been a nice start, especially when you take a look at what's going on in the soy complex.
Yes.
And it's because it's not just soybeans. Soybean meal and soybean oil working together to work prices to the upside. Not a huge amount of of product spreading going on. If anything, it feels like they've, boy, I got to be careful when you start thinking like this. But it feels like the funds have just decided, listen, if I'm in a short position in the soy complex, that's not the right place to be.
That makes sense.
So, but that's how the markets are trading. But normally, even at this time of the year, the funds in particular would be saying, well, you know, I want to be long meal, but I can be short oil against it. And it could just be that with soybean oil under 50 cents, they're figuring the downside risk isn't that great. It could just be with meal under $350 that the downside risk just isn't that great. Or from their perspective, that the downside potential isn't that great, and it's time to get out of the short positions. But Brian nailed it.
Yeah.
If any of the problems that have happened in Brazil so far don't turn into more demand for U.S. beans, was it really a problem to begin with?
Right. I got a question for you here. We have talked about bull spreads. We've talked about bear spreads. I'm going to call what we've got going on in the front 5 months of soybeans a camel spread, because it's got a hump in the middle. I got the March at 1182. I got the Sept at 1190. And here's July at 1208, the August at 1203. Is that a thing? What is that?
Well, look at it from your crop year perspective. It's got some carry in the old crop from 1182 in the March, which is in delivery, up to 1196 in the May, to 1208 in the July. So the market is still paying you to store beans out to July. Now, is it enough carry to cover all the costs of storage? 96 up to 1208, 12 cents from May to July? No, I don't think that's enough. If I'm going to be thinking about 8 cents a month, something like that, the 12 cents doesn't get us from May to July. And maybe 8 cents is a bit too much, but I don't know. I don't think so. And then after that, even with the August contract, you're starting to feel some of the influence of the new crop. So the idea that acres are going to be up 3 million. That supply is cushioned by expectations of a 315 million bushel carry. So you got the new crop influences that are kicking in on the soybeans. Now, conversely, should be able to make the same exact arguments in corn, and you can't. The carry takes you all the way out to the D's contract.
Right.
I don't know. You got a carryover projection over 2 billion bushels. Stocks to use 15%. I don't know why the D's corn would be carrying a 30-cent premium to the May.
Yeah. All right. Well, moving on to cattle.
But that's something that we should explore with the guest analysts here going forward. Let's figure out why D's does have a 30-cent premium to the May.
Heavyweight choice box beef has been on your mind.
Oh, yeah.
And now we've got this. So we've got the heavyweight choice at what, 312 is it? And
312.51.
Select at 299.
78. Yep.
And Brian Grete was talking about this is going to test the consumer. How bad does the consumer want beef?
I don't think there's any question. You look at what is going on with that market right now, and it certainly feels like the retailers are committing to some post-Easter features of beef.
Okay.
B, that the supply side is still, and I mean, we can track that through the slaughter numbers and the carcass weights and everything. but the supply side is the supply side fundamentals of the market has not changed. Okay, it's still tight, if not ultra tight, out there. So it's going to be. Here it is. We're set up for the demand test now.
Yep. Yeah, absolutely.
Yeah.
The other thing is you mentioned that pork plant shutting down. That's Perry, Iowa, as I recall,
Right.
and they're shutting that sucker down on June 28 is when they locked the door. Just a little bit over there. Yeah.
You just wonder if there might be some time to prevent that from happening. I don't know if there will be or not. Yeah. All right. Very, very quickly here, we're looking at National Weather Service 6 to 10 day outlook, March 18th through the 22nd. Let's call it mostly below normal temperatures across the Corn Belt. You got to get out to the western areas to see near normal to above normal temperatures in the Corn Belt. Got below normal precipitation, Missouri through the eastern Corn Belt, near normal through the rest of the Corn Belt. Thank you so much for listening this afternoon. Tomorrow morning, Paul Neiffer and a Farmer Forum coming your way on AgriTalk.